Semiconductor-related stocks soar as reports emerge of US sanctions hitting China's chip industry. South Korea's central bank makes rare back-to-back rate cuts, bracing for potential Trump-era tariffs. And with Donald Trump's inauguration approaching, US-Mexico border cities brace for trade tensions. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Semiconductor equipment stocks rallied sharply on reports that US sanctions on China's chip industry may be softer than initially feared, easing tensions in the tech battle. Semiconductor companies, including ASML, have long been entangled in the US-China tech battle over chips and equipment. The new sanctions under discussion would target Chinese semiconductor equipment makers rather than chip-producing factories. The US is also considering a narrower export blacklist, excluding firms like Changshin Memory Technologies while limiting fewer suppliers to Huawei. Softer sanctions are seen as a positive for foreign semiconductor equipment firms like ASML, which previously forecasted a 30% revenue drop from China in 2024. Reduced restrictions could soften the expected revenue decline. Semiconductor equipment stocks reacted positively to the report on Thursday. ASML shares climbed 2.9% in Europe, while Tokyo Electron surged 6.7% in Japan. Let's get more on this now with Naeem Aslam, Chief Investment Officer at Zay Capital Markets. Good to see you, Naeem. Now, what could be the potential consequences of these tariffs on the global semiconductor industry? Could we see another chip crisis?
Thanks for having me. I mean, that is certainly one of the possibilities which the market and investors very much anticipated on the back of the initial headline, which came out when Trump said that he wants to go head-to-head for another trade war against China. Now, of course, among investors and traders, there is this sort of a feeling of a bit of an easiness that the new Treasury Secretary, that when he has chosen for the position, he is very much aware and he is very much about pro-trade rather than having tariffs. But again, going back to your original question, if that happens, we could see some really big concerns. And of course, inflation would be the one to watch over in the United States.
Right, and China has warned of what it calls necessary actions if the US escalates chip control measures. What could these actions be?
Well, I mean, one of the biggest one, of course, we can see in terms of the American companies operating in China. And of course, we know Apple CEO, he's been in China since the election. He has visited there, and then he wants to make sure that their company doesn't get caught in this particular battle between the two countries. So the concern from the CEOs of companies like Apple is, of course, they don't want to get caught in this particular war.
And what kind of an impact could this have on big tech's AI push?
Well, in terms of a big tech AI push, if you don't have your main chips, which are a very important part of the equation, coming from China, or you have a supply restriction, obviously, then you have a massive backlog. And you have a massive backlog, it's going to have two particular impact. Number one, slowdown in the industry innovation. And number two is, of course, a huge surge in terms of prices. And when prices begin to surge, then we will see the direct impact in terms of an inflation number.
Right, and the semiconductor industry has recently seen some volatility. Aside from the potential tariffs, what has been behind this?
But in terms of a volatility, if you're referring some retracement in this particular sector, especially with respect to NVIDIA and then a few other similar companies, is because I think now we are seeing what we call a reality check. Before, there was just too much hot air that this particular sector is just going to continue to grow to exponentially, which it will for sure, but not to the extent where what speculators were very much expecting. And because of that, we have seen this particular volatility volatility in the market, but we continue to maintain any retracement, especially within the AI sector, and the companies which are related to that remains an opportunity because the area for the room to improve for these particular companies is still huge. The market is significant, and we are still very much positive on the overall sector.
Okay, Naeem Aslam, Chief Investment Officer at Zay Capital Markets. Thank you very much for your analysis.
Thank you for having me.
Meanwhile, the Bank of Korea has cut rates for a second consecutive time, the first back-to-back rate cut since 2009. It was an unexpected decision, but authorities are preparing for a worst possible scenario from a Donald Trump presidency. Emre Boz has more.
In the hustle and bustle of the South Korean capital, Seoul, authorities are bracing for tougher times. The fear is a lack of global demand triggered by a US presidential win for Donald Trump. Analysts say that trade ties may slow between the two countries. This is as Trump pursues his America First policy. And that's why the Bank of Korea reduced its interest rates by 25 basis points, falling to 3%. It hopes to spur local production by increasing demand. As the cost of borrowing becomes cheaper, consumers may be more willing to spend. Hopefully, the lifeline the economy needs if it wants to protect against a drop in global demand. Already, the South Korean economy has seen lackluster growth since the beginning of the year. It's rebounded from negative growth to 0.1% in the third quarter. And stock indices like the Kospi have also seen a downward trend, falling by more than 7% in the last 6 months. The hope is that lower rates will make the Kospi more attractive. Investors are optimistic about the economy going forward, with the expectation of more stimulus measures. But with Trump yet to begin his term and his policies still unknown, the future growth of the South Korean economy will be a game of wait and see. Emre Boz, TRT World.
Joining me now from Singapore is Indo-Pacific Affairs Analyst Victor Teo. Good to have you on the programme, Victor. Now, how big of a threat is Donald Trump's America First policy for South Korea?
Well, I think it's not just for South Korea. I think across the region, everybody is feeling a little bit jittery. But Donald Trump's America First policy is actually one of his campaign promises to try and bring back manufacturing to the United States. So this policy actually affects all East Asian economies who are manufacturing and selling things to the US. South Korea, being one of the manufacturing heavyweights, is particularly concerned because it's concerned on two fronts. First of all, it's worried that South Korean exports will no longer be competitive and they can't export a lot to the United States. And the second concern stems from China and the US-China competition. Because the Trump administration has actually threatened China to levy tariffs up to about 60%. But right now they're saying, well, it's going to go up to 10. And the Chinese response has been to, of course, to cut rates and to have the Chinese government heavily subsidizing certain industries. And they are trying to diversify their markets. And to that extent, it presents a problem for the South Koreans because the South Koreans might be making the same category of products and exporting them to these markets. So compared to Chinese products, South Korean products are no longer as competitive as it used to be because of the pricing policy of the Chinese. And this is why the South Korean government is now doing everything it could to try and hedge against a potential economic slowdown and all these trade uncertainties due to US-China trade war.
Right, and how is the region as a whole preparing for the potential economic fallout of Trump's policies?
Well, I think, it's not the first time that Trump is in office. So the region has actually survived one term of the Trump administration, even though it was interrupted by the COVID pandemic. The second important thing to note is that even though Donald Trump has tried to do the same thing in his first term, the effect of the way the trade structure is being has crystallized over the decades is that even though Donald Trump wanted to bring back manufacturing, it just couldn't. Actually, towards the end of his first administration, the United States was actually importing more than ever because of the pandemic. It realizes that it couldn't do anything, so he had to buy even more things from China. So the deficit with the Chinese grew at that period in time. So But having said that, what the US has is actually a capitalist problem, meaning it's actually importing more than it exports. So this is not a China problem or South Korea problem, it's a US problem. So even if the Americans do not buy from China, they will have to buy from somewhere else if they cannot make it as cheaply as this other partner. So in that respect, I think most of the region is not too overly worried. I mean, people are concerned, but they are not overly worried, I would say, because they realize that even if the US wanted to switch, they can't do it overnight.
All right, Victor Teo there in Singapore. Thank you very much for your analysis.
Thank you.
Now, a quick look at some of the other top business stories from around the world. The Brazilian real tumbled to a record low while stocks experienced their steepest decline since early 2023. The currency fell by as much as 1.5% to 6.02 per dollar. Swap rates surged over 40 points and the benchmark stock index dropped 2.4%. This followed a proposal to cut $12 billion in public spending, which failed to ease growing investor concerns over the country's budget deficit. China is extending tariff exemptions on some US imports until February 2025. The list includes rare earth metal ore, medical disinfectant, nickel, cadmium batteries, shielding them from retaliatory tariffs. The move comes despite US President-elect Donald Trump's threat of an additional 10% tariff on Chinese goods. Paris has announced stricter rules for holiday apartment rentals to address the housing crisis. The new measures include fines of up to $105,000 for violations. Officials plan to cut the rental limit for primary residences to 90 days a year, starting January 1st. The city aims to ease housing shortages caused by short-term holiday rentals like Airbnb. And Toyota's global production fell 0.8% in October, marking its 9th consecutive monthly decline. US production also plunged 13% due to a temporary halt on SUV models, while output in China fell 9%. However, domestic production in Japan rose 8%, recovering from last year's supply chain disruptions. Despite lower production, overall global sales grew by 1.4%. Still ahead on the programme, trade tensions rise as Trump's inauguration nears, with border cities bracing for potential economic fallout. That and more after this short break. As US President-elect Donald Trump's inauguration nears, tensions over trade are heating up again. Businesses and workers, particularly in cities along the Mexico border, are now bracing for the potential fallout. Omar Bakkalola reports.
During his first term, Donald Trump left a lasting mark on U.S. trade policies. He weaponized tariffs, renegotiated NAFTA, and even pledged to build a border wall with its biggest trading partner, Mexico. As he now prepares to return to the White House, his playbook doesn't seem to have changed much. On Monday, he announced plans to impose a 25% tariff on goods imported from Mexico and Canada and charge an additional 10% tariff on China, setting the stage for another round of trade wars. But the impact won't be just felt abroad, it could also ripple across the US economy. For border towns in Texas, where jobs and businesses heavily rely on trade with Mexico, the consequences could be devastating.
We are going to see how things will progress once the president-elect takes office on January 20. But the messages they have been sending, saying they want to raise tariffs, calling the border conflictive, talking of issues like violence and migration, they are not contributing to all of the investments that could come.
In 2023, trade between Texas and Mexico alone reached $272 billion, making Mexico the state's #1 trading partner. Higher tariffs could particularly hit U.S. car makers, which operate manufacturing facilities on both sides of the border.
One tariff will lead to another, creating a domino effect that puts our shared businesses at serious risk. take Mexico's main exporters to the US, like General Motors, Stellantis and Ford, companies that have been operating here for over 80 years. Why impose a tax that threatens their stability? It's unacceptable and would only result in inflation and job losses for both the US and Mexico.
Mexico says it might have to respond with its own tariffs, which could make things worse for the world's largest economy.
If we impose a 25% tariff on the companies I mentioned and many others, the impact could be severe, potentially affecting an estimated 400,000 jobs in the United States.
As Trump's inauguration approaches, trade wars could damage the economies of all four nations, putting businesses and jobs at risk. Ömer Bakalolu, TRT World.
Let's get more analysis on this from David Dunn, Professor of International Politics at the University of Birmingham. Great to have you with us. Now, President Trump's trade policies often emphasize protecting American jobs, but do these tariffs realistically align with that goal, or could they lead to the opposite?
Well, in the short term, the effect will be massively disruptive. The North American economy, since Bill Clinton passed NAFTA in the 1990s, has been one integrated economy. There's a huge amount of oil and lumber and manufactured goods come across from Canada, and 82% of the Mexican economy is exported into the US. That's car components, as your report said, there's agricultural goods, it's everything, because Mexico is the site of foreign investment to access the American market through cheap labor. So if the tariffs were imposed on those, the mechanism of trying to raise those taxes would be disruptive to the free flow of trade. And then the impact of the higher prices would be disruptive in terms of loss of jobs. In the long term, it's unlikely that America will be able to fill those shortages of supply from Mexico and Canada, because there aren't the indigenous American industries that could easily replace the cheap imports coming in from its north and south neighbors. So that the impact will be massively disruptive to jobs, to actually supply chains, to actually production schedules, and in the long term, it's not clear that the American economy will be able to actually respond to that in a way that actually it has got the desired effect that Trump wants. And of course, it'll be massively inflationary.
And for US border towns like those in Texas, which rely heavily on trade with Mexico, what could the immediate economic impact be if these tariffs were to go into effect?
Well, again, there's a lot of movement of not just goods across the border, but actually personnel. So actually, a lot of livelihoods are dependent on these goods, of course, and they're geared up to receive these huge amount of imports, whether that's avocados, chili peppers, or car parts. So actually, if you actually need to put those tariffs on and make sure that everything that goes across that border is checked, that will be massively disruptive to that free flow of trade and people. I mean, it may well be, of course, that these tariff threats are just that at this stage, threats. Whether people will, whether the Trump administration will follow through on such a large tariff, so universally imposed, is yet to be seen. Because if they did do so, the disruption would be enormous and inflationary and will cause unemployment. And of course, they're the things that he got elected to try and stop.
And what impact could these tariffs have on the other side of the border?
Well, as your report said, the impact will be major job losses there, and I mean, it's also got to be seen alongside the threat to U.S.-Mexican relations that the Trump administration is putting forward with the plan to deport between 10 and 20 undocumented migrants. As well as disrupting trade, you've also got the prospect of Trump trying to actually build camps to intern Latin American migrants into America and then pushing those across the border into Mexico or forcing them to return in other ways. So the potential for inter-American conflict over migrants, over trade, over tariffs, over drugs is enormous. It's interesting to see whether these things will be actually pursued by Trump once he gets in office.
Okay,
I think part of the reason he suggested...
Professor David Dunn, unfortunately, we will have to leave it there. Thank you very much for joining us today.
Okay.
Now, as we stand on the brink of a new era in space exploration, the development of rockets is more important than ever. Tulay Kalyon Haznederoğlu spent time with a pair of rocket designers in London and sent us this report.
In a world where space exploration is becoming increasingly important, rocket manufacturing is at the forefront of innovation. Two young entrepreneurs, Daniel Schupak and Konrad Skyby, are working to revolutionize this field.
We are developing a new proprietary type of rocket system. At the moment, we're developing the engine. We don't use internal combustion, which presents several benefits, but the main one is that we can deliver small payloads to orbit for cheaper than is currently offered. Whereas we cater more to private researchers, institutions, individuals who can't necessarily afford to do that, but would like to put something into orbit, whether it's a satellite for research purposes or someone wants to honor their dead dog by putting their ashes into space, right?
Entrepreneurs, engineers, and scientists are pushing boundaries in this ever-evolving industry.
So right now, most of our funding is coming from grants. We recently got a grant from Emergent Ventures, which is a grant company backed by George Mason University in the US. It was a $10,000 grant. Our first test, the hot engine test, in 15 weeks, is going to be at one of the UKRA's sites. So the UKRA is the United Kingdom Rocketry Association, and we're in contact with them and we're communicating with them and we're trying to set up us using their facilities.
Decreasing launch costs and ongoing commercial innovation are said to be driving rapid growth in the space industry. According to World Economic Forum reports, the global space industry was worth $630 billion in 2023. And the space economy is projected to grow a further $1.8 trillion by 2035. As the space industry becomes a global phenomenon, 92 nations now have satellites in orbit. The technological development of rockets is vital for space missions and also has cross-benefits on Earth for industries including meteorology, telecommunications, insurance, transport, aviation, and urban development. What began as a space race between the superpowers has now expanded into a truly global movement poised to reshape our planet and whatever lies beyond. Tulay Kalyon Haznederoğlu, TRT World, London.
Plastic waste is a major menace across the world. They litter the environment and the majority end up in the oceans, posing a threat to marine ecosystems. But Africa is fast becoming a dumping site for all kinds of plastic waste. There are ongoing initiatives by innovators to recycle and upcycle the plastic waste, but activists in Ghana want better and efficient policies to address plastics and associated wastes menace. Isaac Kalechi has more from Accra.
It's a busy day for these beach kumes in Ghana's capital, Accra. They are passionate about keeping spaces like these clean. Most of the waste being collected is plastic.
For us, we do carry out beach cleanups to be able to understand the sources of these pollutants and collect relevant data. What we realize is that, yes, we have an underlying problem of inefficient waste management systems, and therefore most of that waste is from Ghana. However, we do also find traces of some pollutants which generally or originally did not originate from this. You could attribute this to transboundary pollutants. So yes, the plastic pollution menace is really at a devastating point over here in Ghana.
As with many places in the world, a deluge of plastic pollution is slowly smothering this country's environment.
We have plastics entering the oceans. We've recorded some aquatic animals like aquatic organisms or things like fish, which have shown some plastics. Some whales were dead, the chair turtles and all that have ingested plastics, and then it led to their death. And also when you have plastics in the environment, it destroys the aesthetic scenes and all that.
Ghana generates almost 1 million tons of plastic waste every year. Not only is the use of single plastics high, but poor waste management and limited recycling practices add to the problem. Activists say the problem isn't just generated locally, but it's made worse by plastic waste coming in from Western and Asian nations. Effective policies that control the import of waste would be key to addressing the issue.
But it is not only policy that prevents the dumping of plastics and associated waste in Ghana. Green entrepreneurs like Ya Birago and his team at Soko Bags want to also create local but viable alternatives for plastics.
So what the whole point is for us to eradicate plastic bags. And we know that plastic bag pollution, a single-use plastic bag pollution, is one of the biggest problems in Ghana. So we want to be able to be in the position to work with the government and private organizations to make sure that the solution is resolved.
Many Ghanaians seem committed to joining the fight against plastic waste pollution, but it remains to be seen how far government is willing to go to back these efforts with effective policies. Isaac Kalaji, TR2 World, Accra.
Well, that's all your business news for now. Thanks for watching.